Ladies and gentlemen, good day and welcome to the TD Power Systems Limited Q4 and FY2024 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone telephone. Please note that this conference is being recorded. Now I hand the conference over to Mr. Nikhil Kumar, Managing Director for TD Power. Thank you, and over to you, sir.
Thank you, and good morning, everybody. Thank you once again for joining us today on our earnings call. I trust all of you will receive our results and investor presentation. Now I will discuss with you TDPS's financial performance for the year ended 31st March 2024. First, standalone. Our full year total income on standalone basis was 10.07 billion versus 8.43 billion over the same period previous year, into the 19%. EBITDA for the full year is 17.66%, including other income but excluding exceptional and treasury income, versus 16.18% over the same period in the previous year. The company has spent 32 million towards a one-time VRS scheme during the quarter, with 20 million towards backlog gratuity payments to contract and temporary workmen as required under the new labour code, and provided 17 million towards royalty payments on account of sale of 2 coal generators under the license agreement. All of these resulting in a drop in EBITDA margins during Q4. Profit after tax and comprehensive income was 1,223 million versus a profit of 884 million in the same period of the previous year, an increase of 38%. Order book of manufacturing segment is 11.89 billion, out of which 7.4 billion is the regular manufacturing business, 4.18 billion the railway business, and now the spare and aftermarket business is the project business is now 0.15 billion. The Turkey business is 0.17 billion. Exports and deemed exports of the generator and motor business, excluding railways orders, is 64%. Order inflow statistics. Order inflow has increased by 24% over the previous year as follows. Strong order inflow momentum continues in this quarter on both domestic and international markets. The order inflow from direct and deemed exports is 5.9 billion compared to 4.44 billion in the previous year. Exports and deemed exports order inflow is 57% of the total order. Consolidated, our total consolidated income was 10.17 billion versus 8.93 billion, an increase of 14%. Profit after tax and other comprehensive income for the year is 1156 million versus profit of 99.5 million, an increase of 22%. We continue to maintain a strong cash position of 2.22 billion. Now I will come to the order book market situation and guidance. Overall, the order inflow continues to be very strong from both domestic and export in the generator and motor business. The rate of order inflow will support the sales guidance that we have given for this present year as FY25. We continue to hold our initial guidance at minimum 17% growth, with an upside potential of 3 to 5% on top of 17%. Most likely, we expect the number to be around 1,200 crores for FY25. Margins will grow faster than sales due to operational leverage. Margin growth will be 3 to 4% more than the sales growth due to operational leverage. As has been the trend this year, we expect about 46 to 47% of the revenues to be achieved in H1 and about 53 to 54% in H2. Based on delivery patterns of our customers in this year and larger machines in H2 will be stronger than H1. For Q1, we expect the sales of 2.5 to 2.6 billion console, and for Q2, we expect the sales to be 2.9 to 3 billion console. Market scenario. The market in all segments except railways is very strong both internationally as well as domestically. The domestic market is limited to mainly steam turbine and motors, but in both segments we are seeing strong orders on inflow in Q1 and a strong pipeline for orders for the rest of the year. The sector is driving the growth domestically as cement, steel, paper, and sugar. In the international market, the order book is driven by bumper orders in the segments of hydro, gas turbines, and gas engines. The gas turbine and gas engine business is strongly driven by demand in oil and gas, data centers for artificial intelligence, and grid stabilization power plants. We are seeing huge increases in orders received in these three segments, and the pipeline is very strong for this year as well as for next year. In addition, all these three have big potential for sustained business in upcoming quarters and years. Hydro in Southeast Asia, Nepal, and parts of Europe continues to be booming with a strong pipeline of orders and inquiries. In the motor business, we continue to grow the business at a healthy rate, and this year we hope to cross the 1 billion target for order inflow. We are also getting a number of export orders from Middle East, and this is providing great references to build our business for the future. We're concentrating on oil and gas, water utilities, lift irrigation, nuclear power plants, and large motors required for fans, pumps, and compressors. Lastly, the sector that has disappointed us so far is the railway business, with almost no action, almost no I would say, potential for closing any deals in the next quarter also. Perhaps things will change after the elections. This brings me to the end of my initial remarks. I'll now be happy to answer your questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Viraj from SIMPL. Please go ahead.
Yeah, thanks for the opportunity. Am I audible?
Sir, may I request you to use your handset, sir?
Yeah, am I audible?
Yes, sir, you're audible, but you're
audible. It's not so clear, but anyway, please go ahead.
So the question was largely, if I look at the console minus standalone, the subsidiaries, I think there's a swing of almost 10 crores in this particular quarter. So were there any one-offs in there?
Yeah, Varalakshmi, can you please take this question?
Yeah. So we had a dividend income from our subsidiary Turkey office, and when we are showing the console numbers, we will have to eliminate this. So that was around 42 million. So that is one of the numbers. Mainly that is the reason.
Okay, so difference is almost 10 crores. So were there any one-off expenses or currency-related provision or any write-off?
There was also 40 million loss, basically on account of depreciation of Turkish lira from 4.3 to 2.58. So these two are the main reasons and attributing to almost 9 crores.
Yeah, the Turkish subsidiary continues to suffer from the problem of rapidly depreciating Turkish lira. And when we translate, even though we are having operational profit from that subsidiary, when we translate the currency back into Indian rupees, due to 40-50% drop in the value of the Turkish lira compared to Indian rupee within a quarter, then we have to suffer the translation loss. And this has been going on for now quarter after quarter, because the Turkish currency also is depreciating at rate about 70% per year. And we have no choice but to report it as per the accounting standards.
Okay, so this is more of a notional loss other than the cash loss. Hello?
Yes.
No. So this is more of a notional loss other than a cash loss, right?
Yeah, it's a notional loss. It's only a translation loss.
Okay, fine. And in terms of the capex, you give the guidance for the growth and the margins, but in terms of capex, I think we were looking at the new facility. So given the kind of inflows you're now seeing, is there any revision in terms of the capex which we'll be looking for 25 and 26?
No, we are sticking to the plan. So we are putting up the third unit. Construction is going to start very quickly, and we will spend, as we have mentioned earlier, we're going to spend 120 crores for that plant. We have other capex for the existing two factories, which is approximately equal to depreciation every year. That will also continue, and we will spread this investment over 2 years. This financial year and next financial year. We will not be short of capacity, and we will make sure that we will deliver every single order that we receive.
Okay, and just last question, in terms of the announcement we had made in Q3 regarding the tie-up with Brush, so by when do we expect, us to kind of start commencing the orders?
No, we have got good orders from them already. They're delivering some machines this year, and the pipeline is building up. I have no doubt that this will be a good relationship with TDPS. I'm not going to disclose the numbers, but it is going well.
Okay, I'll come back. Thank you. Thank you.
Thank you. A reminder to all participants, ladies and gentlemen, you may press star and 1 to ask a question. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Pramod Dangi from Unifi Investment Management LLP. Please go ahead.
Yeah, thanks, and hi, Nikhilji. So my question is on the quarter. Yeah, hi. My quarter 4. See, if I look at the volume of the generator supplied, it actually went down year on year, and for full year also it went down for both export as well as domestic. So is there any order which got postponed to or delayed to the quarter 1 this year? Because I'm comparing this with the numbers of the Triveni turbine, which had a very good quarter as well as a full year. So is there any contact deferred?
Volume should not be the benchmark, Pramod. We had in Q4, we have produced 4 machines, large 2-pole generators, these 90 megawatt and 60 megawatt machines.
So bigger one.
Yeah. Those are very high value, but the number is much lower. So I feel that it is, and in other segments also, for example, in hydro, we've been producing a large number of bigger megawatt generators. So that will lead to a higher value but lower volume. I feel that volume is not a good measure of what kind of mix that we're getting.
Okay. So there's a follow-up. Is there any shift happening in terms of the megawatt or in terms of so that this trend will continue and we should ignore if this happens in the future as well?
Yeah, I would recommend to ignore it because we don't use it as a measure of our internal, when we're doing internal reviews in the company, we don't look at volume. We look at the value, we look at megawatts into number of poles, that's something that we look at internally. But we are confident that when we have larger generators, our margins also tend to be better because we get better pricing for larger machines. So we are seeing this year, in this financial year, we will not have so many 2-pole generators as we did last year. But next year, again, we are seeing a big build-up of orders for 2-pole generators already in the pipeline. We have good, healthy order book forming for 2-pole next year. So, it's difficult for me to say that every year is going to be the same. This year, we will have more smaller ratings compared to larger ratings compared to last year. Next year, we're going to have more larger ratings, and hopefully we'll have larger ratings and smaller ratings next year, which can be a boom. But year on year, it's different. And I think that is one of the strengths that we have in the sense that we are in different markets with different products, with a very highly diversified product range. So when something goes up and something goes down, we're able to balance out the numbers by being present in different parts of the market.
Sure, got it. Thanks. And lastly, in the competitions, in this year, last year, did we lost market share? Did we gain market share compared to the industry growth, overall industry growth in India specifically?
India, we have maintained market share for sure, no doubt. And internationally, we are gaining market share. We are growing, and our international business is growing much faster than the growth in the international market. And particularly, I can say that in the gas turbine and gas engine segment, our growth is extraordinarily high, what we're seeing this year compared to in the previous year. Also in hydro, to be honest with you. In these three segments, all our businesses export, 100% export in hydro, gas engine, and gas turbine. Growth has been extraordinary and coming from different reasons. And the gas business is coming from as I said, grid stabilization, power plants, which is, when countries move for more and more renewables, they need to have these grid stabilization power plants where they start up the gas engines whenever there's a drop of production of solar or wind. Then you need hundreds of megawatts to come onto the grid instantaneously to support the grid and to stabilize the grid. Those can only come from gas engines or gas turbines. So we're seeing one big part of the market coming in that. Data centers for artificial intelligence, there's an explosion of demand coming in this area. All of them require some of them require hundreds of megawatts of backup power. This is a big provided once again by gas turbines and gas engines. And then of course hydro, it's been one of the reasons for our increased sales is that, earlier we were restricted by our relationship with FY2023, where we were selling our machines only through one big German OEM, but now we are free from that relationship in 21. And now we are really seeing the effect of that freedom where we're able to address different parts of the market all over the world and getting orders from different parts of the world. So hydro has also grown tremendously for us last year to this year. And the pipeline and the forecast for next year is also extremely strong. Very, very upbeat about this, about the international business for TDPS.
Yeah, thanks, helpful. All the best for the next year.
Thank you.
Thank you. The next question is from the line of Maithili Balakrishnan from Alchemy Capital Management Private Limited. Please go ahead.
Thanks for the opportunity. I just had a couple of questions. One, you mentioned that some royalty had increased and therefore that had also impacted margins. It would be useful if you could sort of elaborate on the same of why has it sort of increased and, on an ongoing basis, what will be the outlook on this front?
Yeah, these large generators, what we call above 60 megawatts, we have a license agreement with Siemens. And as I mentioned earlier in my response to Pramod, that we produce more two-pole generators in Q4. And that's why we have to pay, and we have to pay royalty to Siemens for two-pole generators whenever we produce them. I also mentioned a little bit earlier, we don't have we have only one machine, only one two-pole generator for this financial year. But next year, again, it's building up. The volume is building up for much larger numbers. So this year we won't see a big royalty outflow.
Which is FY25, you do not expect...
FY25, yeah. And we have one big generator in Q2, and we don't have anything in Q3 and Q4.
Okay. So in terms of margins, can we still maintain the 17.5-18% range?
Yes. We will definitely maintain. In fact, we will do better than that this year because we will have operational leverage. We're still operating out. We don't have the third plant up and running. So we're still operating out of two plants. We're going to produce 20% more from these two plants, and we're going to have better margins for sure.
Got it. Wanted to check with you on the railways orders. If you could just comment a little bit on both the direct orders as well as what is happening on the OEM contracts that we have.
The OEM contract that we have is running. It's got a life until...
they have 100 crore run rate for that?
100 crores for about 100 plus crores for about 4 years, so it's running.
Okay.
But other than that, there's nothing happening in the Indian market for the railway business, and that is a big disappointment for us.
Okay.
We expect and we hope that things will pick up after the elections.
Got it. But I just wanted to check with you that we were in the process of getting our product approved by the railways, right? And
yeah, that I had given a guidance of about 15 to 20 crores this year, and that will do.
Okay. On that, there is no.
It's not material. Yeah, it's not material on a 1,200 crore sale. But yes, that we will do.
That will happen.
And then let us see how it. Yeah, that will happen. But in this segment also, we are finding that there is a lot of pricing pressure coming in, and people have dropped prices dramatically in this particular segment, which is direct business with the Indian Railways. So we are hesitating to take on a larger volume because it does not make any sense for us to do so and to ruin our margins. So we are also just doing that minimum amount to be alive in the business. We're not going aggressively full into this business because the pricing is very, very bad at the moment.
Got it.
And we have no idea about that.
Right. And in terms of CapEx for FY25, we are still looking at an 80 crore number, right? Just for this year.
Between 80 and 90 crore will be the outflow for CapEx this year.
Got it. I'll come back in the line for more questions. Thank you. Thanks a lot.
Thank you. The next question is from the line of Nitin S. Dharmawat from Aurum Capital. Please go ahead.
Yeah, thank you for the opportunity. Most of my questions are answered, so just one more additional question that I have is about the raw material price trend. Where do you see this now? Is it stable or is there any change which would impact next couple of quarters for it?
Good question. We have seen a dramatic increase in the prices of copper in the past 2 or 3 weeks. It is now around the $11,000 level. But thanks to our hedging strategy, we have copper booked until about Q3 this year. And we are already talking to our customers for price increases. If prices of copper hold on like this, we will demand price increases so that we don't have any margin impact coming in from Q4. How is this copper prices, whether it's a speculative bubble or whether it's a sustained price level, we don't know. But yes, at the moment, copper is a big red flag for us. Other than that, other materials are pretty benign.
Okay, thank you, and wishing you the best.
Yeah, thank you.
Thank you. The next question is from the line of Himanshu Upadhyay from Bugle Rock PMS. Please go ahead.
Yeah, hi. Good morning. My question was on the third plant, what we are going to do. So what would be the capacity utilization required to break even? And is there any worry that what happened with when we started new plant in FY11-12 and the capacity utilization was low? We felt it became difficult to utilize the plant and profitability took hit. How difficult will be? What is your thoughts on that?
Yeah, hi Himanshu, thank you. A really good question. So I think that the lessons of the past have definitely influenced the decisions of the present. There's no doubt about it that we're going to do our very best not to be in the same situation that we were 10 years or 12 years ago. But of course, the company is also in a very, very different position in the market compared to where we were in 2010-11. Back then, we were only a domestic player, largely domestic player. We did not have these different segments, different products, different reaches, and different references all over the world. Now, TDPS is a very different organization with large variety of products, different markets, different OEMs, and presence and brand name all over the world. We are putting up the capacity in 2 phases, right? We're putting in an investment this year, we're putting in another investment next year. So even to that extent, we are hedging that to see that, okay, we put the first phase and second phase we go through once we see the sustained demand taking place. So, as I said, the lessons of the past influence the decisions today. Obviously, we don't want to get into the same situation that we were in 2011. But at the same time, it is very important to realize that we're not the same company today as we were back then. We're a totally different organization. And I think this will be the biggest, this is the biggest change in how the outcomes will happen in the future.
Okay, glad to hear that. And one more question on the motors business. See, in this business of generators, we have tied up with many OEMs, okay? And last time we stated that oil and gas, we are seeing a lot of capex in Middle East and many places. And some of our OEMs are who are into the gas engine and buyers for generators. They are also into the compression segments, okay? So are we also thinking of getting those OEMs or empanelment with those OEMs for their motor usage, or motors will like to independently build, and how difficult is to get into those OEMs for motors or being a motor supplier to those OEMs, large OEMs, global?
We are building our business motors, fairly, rapidly. So as I said in the call, on my earnings call speech, we are going to be in line maybe this year to reach a order booking level of about 1 billion rupees. So business is coming from different segments. It's coming from an oil and gas business. It's coming from mainly from the Middle East. It's coming from water supply schemes. It is coming from lift irrigation schemes, the synchronous motors. It is also coming from induction motors for large applications, industrial use, maybe fans, compressors, pumps. So we are spreading ourselves in different segments of the market. We're still very much at the stage where we're building references and building credibility. And I think, but the growth has been extremely good and extremely positive. And we will keep growing our business incrementally in all these sectors. So to answer your question, is it difficult? It is difficult, but TDPS has the capability to make these larger machines, and TDPS has the references in large generators across the world, so it's not difficult to convince a technical buyer that having made a 30 megawatt or a 40 megawatt generator, that we can make a 10 or 20 megawatt motor. It's not difficult to convince a technical buyer or a technical end user that this is the capability of the organization. That's where we are, Himanshu. We are, as I said, we are growing the business incrementally, and we will have good results on this segment for sure. This will be a key part of our motor business, will be a key part of our growth plan, is a key part of our growth plan, and will play an increasing role in the product mix of the company in the future.
Okay. Thank you from my side, and wish to see 1,800 crore sales in 3 years, or the full capacity utilization of third plant. Thanks.
Thank you. The next question is from the line of Shyam M. from Aditya Birla Mutual Funds. Please go ahead.
Yeah, hi sir. Congratulations on a good set of numbers. Just had a couple of questions. Firstly, on the order inflows, while they have grown very strongly over FY24 numbers, domestic inflows for this quarter are down by about 15%. So wanted to just get a sense check from you. Is there some sort of a slowdown you are visiting in the domestic market, or is it largely been, finalizing the orders has been slower and probably the inquiry pipeline is there? So just a little bit of understanding around that.
Yeah, Vinay, can you take this question?
Yeah, thank you. And you are very right. The inquiry pipeline is very, very strong, and it is only a matter of order finalization, which are, getting a little bit postponed by a couple of months. Mainly this is the election, which is, going on, and the last 2 cases are there, and this is, I think, going on for the last 2 months. So that is why you are seeing a little bit lower order booking for this quarter. But definitely there's a pile-up of active inquiries. I think all of them are going to get finalized in Q1 or early Q2.
Understood. Thanks a lot. And my second question was on the newer segments that we are targeting, with the newer products such as the synchronous and the submersible motors. While you're guiding that, we'll probably look to get about 100 odd crores of inflows in this financial year. Wanted to understand, which particular product is going to drive that growth, and is there any particular product you see is getting higher acceptance in the market from the new products that you have released?
This year, it will be more induction motors in terms of order inflow compared to synchronous motors. Because synchronous motors, is mainly used in large irrigation projects which are state government funded. So those are patchy. They come and then, one large order will come and then there could be a large gap of time and then the next order will come. And that's how this particular market functions. So it's inconsistent and lumpy. It's better to have. So we are focusing a lot on the other part of the industrial side of the market, oil and gas, where the demand is more consistent. And so this year we are focusing on in order inflows mainly on the induction motor side. And we're once again focusing on large induction motors, more complicated products. Nuclear Power Corporation also has a large number of tenders out there. So the 100 crores business, which the inflow for this year will be in areas which are not related to lift irrigation schemes but other areas.
Understood. And just let us check how much was this inflow for FY24, the motor business?
Around 30 or 40.
Understood. Those are my questions. All the best, sir, for the upcoming year.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, may we request you to limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Deepesh Agarwal from UTI AMC. Please go ahead.
Yeah. Good afternoon, Nikhil. Good afternoon, ma'am. So my first question is on margin. Sorry, I joined late. This is repetitive. Your other expenses and employee costs both are up. I believe your royalties increased, but why the employee costs would be up significantly in this quarter?
Yeah, Varalakshmi, please answer this question.
Okay, sir. We had a VRS scheme for workmen, and which resulted in 32 million of cash outflow. And we also had a 20 million of cash outflow on account of the backlog gratuity payment to contract and temporary workmen as required under the new labor code. So these are 2 reasons, and these are one-time payments.
Understood. Sir, then how much capacity with the third plant will add to us? So I guess you earlier highlighted we typically have 1,500 crores of a capacity in terms of revenue potential. When you add the third plant, what should we think about the capacity addition in terms of revenue potential?
So you should think we are looking at something like 1,700 to 1,800 crores total capacity potential once the third plant is up and running in full steam. So the third plant, as I have probably mentioned, I don't know, in earlier earnings calls or maybe in individual one-to-one meetings with all of you, that it's going to be mainly a component plant. So it's going to be supplying components, sub-assemblies to the main plant, and the main plant which is currently producing those components and sub-assemblies, that activity will be shifted to the new plant. In addition, we'll be adding more capacity for components and sub-assemblies in the new plant, freeing up space and capacity in the main plant for more final assembly testing and so on and so forth. That's the general structure of how we're going to be setting up our manufacturing in the next 2 years. But overall, the capacity will go up to around 1,800 crore. And we're keeping it extremely flexible so that we can, depending whether it's motor, generator, large sizes, lower sizes, whichever way the market moves, we should have the ability to respond and we should be able to produce whatever the market wants.
Sure. And what is the status on ramp-up of that oil and gas orders execution and LM250 gas generator?
LM250, we had to produce one generator for LM2500 for a customer in the US-based customer. That will be delivered by the end of this year or early next year.
Okay. And oil and gas?
Oil and gas business is, for us, the gas turbine business is booming. Another US-based gas turbine OEM. We are producing, I don't know now, it's going to be it's a big business this year. They also added through our relationship with we kind of a relationship with a company called Baker Hughes last year. That's also adding on to our gas turbine business in the oil and gas segment. So overall, the gas turbine business in the oil and gas segment is really, as I mentioned earlier in my speech, dramatic increases taking place for us in the increase in the gas turbine business, and it's sustainable because it's a new market for us, and the opportunities are really huge in this segment for TDPS. So growth will take place.
Sure. And lastly, so it seems there could be some ordering in the nuclear. So in terms of our PQs and all, we are completely qualified in most of our segments, or we are still having the kind of a gestation period in PQs for the nuclear?
In nuclear, we are still not qualified for inside dome. We are still working on. We're only qualified for outside the dome. So we are working on the PQs for getting qualified inside dome as far as nuclear is concerned. In other parts of the market, also I can say that we are still in the process of building references and building credibility. We may have the pre-qualification, but pre-qualification only then allows you to bid. But still, customers will want you to make machines. They should run. They should work. They should have the satisfaction. So we are still in the process, I would say, of establishing not PQs, but establishing credibility and trust with the customers. It will take time, but we're building up the business step by step. And I'm happy with the progress so far, and I'm also excited about the potential for the future.
Fair to say in next 2-3 years, possibly we can get a complete PQs out there, even inside dome for the nuclear?
That's the goal, but we need to first put these outside dome motors. They need to run. The customer needs to be satisfied. Then they'll give us a chance to go inside dome.
Okay, sure. Thank you, and all the best.
The supply of power from our side can take place to nuclear power corporation, but things don't move so fast over there. So I can't commit to you that we'll have everything done. We'll deliver, but then they have to use it, and then once they use it and once they're happy with it, I'm sure we'll get opportunities inside dome.
Sure. Thank you, and all the best.
Thank you. The next question is from the line of Ashish Agarwal from Sundaram AMC. Please go ahead.
Yeah, thanks. Sir, I hope I'm audible.
Hello, Ashish.
Yeah, hi. Sir.
Yes.
Sir, just most of my questions have been answered. Just one thing, right? In other expenses, excluding the royalty fees, but still the other expenses seem to have increased substantially on a Q1Q basis, and even on the on an average basis, right? For last few quarters, it has been hovering around 15-16 crores a quarter. So if you can just explain what is the reason for this increase. And secondly, on the gross margin front, gross margin seems to have increased substantially. Is it just the product mix which has helped us?
Varalakshmi, you take the question for the expenses, and then I will explain. I will take the question for the gross margin. First, you can go, Varalakshmi.
Sure. Yeah. So apart from the royalty payment, there has been increase in the sales, which has also related in some variable selling expenses and travel and consultation charges increase. So, couple of expenses all put together are leading to this volume increase.
Okay. There was no one-off apart from the royalty?
No, there were no one-off.
Okay, got it. And on the gross margin, sir?
Gross margin, we are getting into more profitable parts of the market, and that is reflecting in the pricing, and also these large two-pole generators that we produced last year, making the complete generator in-house. The rotor has also been extremely profitable for the company. In general, we are with more and more business coming in from oil and gas and export. We are very confident that we're going to be able to hold on to these gains in the gross contribution.
Okay.
And also increasing service business, increasing the aftermarket business and service business also help the cause to increase the gross contribution. So earlier, what we used to hold on to 32 now is 33, 34 is a reality, and the company is going to constantly keep trying to go to even 35. So the goal to keep increasing gross contribution incrementally will be a major thrust for the management.
Got it.
Incrementally.
So next year, what we have indicated, right? It's a combination of both gross margin improvement as well as the operating leverage. Am I right?
Yes.
Okay. Thank you. Thanks, sir.
Thank you.
Thank you.
The next question is from the line of Nilesh Doshi from Prospero Tree. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
Yes.
Yeah, Dhruvesh here. Hi, Nikhilji. And just wanted to broadly understand that one year back, probably around May, we had a meeting where, you had broadly indicated that we are probably gearing up towards a much larger goal rather than the intermittent 15 and 20% growth now. So can we say that now the structure is in place to probably achieve 1,800 to 2,000 crore revenue range over the next 3 to 4 years? Of course, plant and capacity will match, but ultimately the structure has to support us, considering the kind of markets that we are in today.
So that's a very difficult question to answer. Of course, we are putting in the infrastructure to grow at a much higher rate. And we're also entering into different segments of the market with different products, and we hope that we can grow. What we're committing is something 17 to 18% plus every year. And that's what we're committing. The goal is to do better. But if we're talking about commitment, that's the commitment.
Sure. Thank you. And second, when and if the railway orders to your customers come, how large can this opportunity become, let's say, once it stabilizes in terms of the recurring revenues that can happen from this area? Is it like 100, 200 crore thing, or no, over time it can be much larger?
Generally, if we do enter into such kind of contracts, it will not be a 10-year contract, but it could be between 70 crores to 100 crores business per year for a 3-year period to 4-year period, each of those contracts.
Okay. And there can be more than 4 or 5 such, or no? Just to understand the size of...
Yeah, there can be, but we don't see... There was a hope that we would see that kind of thing, where we would see multiple railway contracts coming in for freight locomotives. We were all talking about another 9,000 horsepower. Then we were all talking about another 12,000. Then we were all talking about another 6,000. And nothing has materialized. So then we were, so which way is the freight locomotive market going to move? Which is the ratings? Who are the players? We don't know at this time. Even the high-speed trains, Vande Bharat and everything, we were expecting more tenders to come in the market. But I think everything has come to a halt. So we were at one point in time looking at multiple revenue streams from all these new initiatives, but nothing is happening at the moment. So it is all that zero.
Right. And last small one, when it comes to pumped hydro, because there is a lot of talk and chatter about it, is this real in India in terms of a possibility of much larger?
Yeah, pumped hydro is real, but right now all the action is in the very large sizes, in the 300, 400, 500 megawatt size power plants. Those are machines which are much beyond the capacity of TDPS. Eventually, they should come down to smaller sizes. And when it comes to the level that we have power plants with, let's say, 40, 50 megawatt, 60 megawatt type of machine, single unit, then we will definitely be a part of that action. But right now, the market is not come down to those sizes. Pumped hydro is mainly taking place in the very large size power plant.
Okay. Thank you. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Dwanil Desai from Total Capital. Please go ahead.
Hi, good afternoon, Nikhil. So my first question is, if we look at last 4 or 5 years, we have traveled this journey from a single product, single geography focused company to multi-product, multi-geography company. So earlier, steam turbine used to form the base of the business, contributing 300-350 crore kind of a revenue. So now that we have into multiple products, synchronous motor, induction motors, and many more segments. So do you see, 3 or 4 segments contributing a base business of 200-300 crores? And if so, if you can name some of those segments.
The steam turbine business continues to be a very, very critical part of our future business. Okay, it is still I would say, an indispensable part of our business. India is a big driving factor, and with India, with more investment taking place in India, and we're expecting once the elections are over, the next cycle of capex investments to further accelerate. This product will continue to be a very vital part of TDPS. But at the same time, we need to have other products which are going to be equally large. I see the gas business as gas turbine, gas engines to be equally large. Hydro is already approaching the size of the steam turbine business for TDPS. And then I think the motor business is the next business where we also wanted to come to this level of size where we're talking 200, 300 crores. So we have a way to go. We have a road to travel on. So it's not that we have already done all these things, but we're definitely on a road where these numbers are achievable. And everything will happen incrementally, step by step by step. But the potential is there, the market is there, and TDPS right now is in a good position to achieve these numbers. That's all I can say. The potential for us to take each segment to that size is 100%. It is there.
Sure, very useful. And so any new products other than the synchronous and induction motors, any new thing which again you are...
New products, but we're not in a position to disclose to the market at this point of time. We are definitely working on new things, and we will, as and when they are at a point where we can announce it to you and then answer all the subsequent questions that normally come with that announcement, then we will definitely answer.
Sure, understood. And second question, I think one change that we are witnessing is, and you also mentioned.
Sorry to interrupt, Mr. Desai. May we request you to use your answer, please?
Hello.
Yes, sir.
Voice was.
Yeah. Is it better now?
Yes, sir. Please go ahead.
Yeah. So next, second question is, you mentioned in your commentary and even overall environment, we are seeing that the larger megawatt capacity and turbine is coming back because of the way the power environment is that we are moving from surplus to shortages. So we had built that capability of serving larger megawatt and more than 50, 60 megawatts. So are we seeing any uptick in that segment? Are we reorienting to cater to that demand? Because that also is a reasonably large market.
Any thoughts on that?
Vinay, you can take this question since you're on the market.
Can you just once again repeat that question?
So I think that overall environment.
Do we see the large above 60 megawatt market, given the power shortages, given the situation in the country and outside the country? How does the market look for these larger sizes, and where do we fit into this?
Yes, larger size inquiries are not much. If you're talking about anything above 60 megawatt to 200 megawatt, there are very few inquiries, but the numbers are increasing below 60 megawatt.
Okay, so 30 to 60 is the traction.
Yeah.
What do you think?
Yeah, 25 to 50 megawatt, the numbers are more, but between 60 to 200 megawatt, that could be 4 or 5 machines per year.
Okay.
The international market for the larger generators above 60 megawatt is a big market, dominated by just a few players.
Right, because the context to this question is the oil and gas.
We have a licensed product. So we are not free to sell these machines all over the world. So there are restrictions for us to go into this market in a very big way because we don't have our own product. Okay. And so I think we will always have our hands tied because of this particular reason. We want to look at this large two-pole market outside India.
Okay.
That's the problem of having a licensed product.
Okay. But you are not thinking along the line of developing some of your own products for oil and gas rigs, which are much larger megawatt, requirements.
I mean, we about 250. No, I mean that's not if at all right now we are in this agreement with Siemens. Anything that changes, we will keep the market informed about if there's any change in direction as far as this large two-pole generator market is concerned. At the moment, this is where we are. There's a limitation that we have. As Vinay said, the market in India could be 4 to 5 machines per year, and that's where we are. So we are focusing our activities on our own products, our own technology, where we have complete freedom to do what we have to do. It makes no sense for us to concentrate on products where we have our hands tied behind our backs.
Understood. Thanks. Very useful. That's it, and all the best. Thank you.
Okay.
Thank you. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much. Thank you for the opportunity.
Hello, Mahesh.
Sir, at a broader level, is it possible to share out of a total revenue, how much came from generator and how much from the motor? Broad.
We will share this, Mahesh, once the motor business becomes a significant part of the revenues. Once it starts increasing, then we will share this number with you. I think we should be able to do it this year, but let it grow to a size where it's meaningful, and then we will share it. I've already shared earlier in this call a little bit about the order inflow, and I've shared about how the order inflow is growing. I think that can give a direction as to when the revenues also will then become real. It then gives a sense of direction how the revenue growth is also going to take place for the motor business for us. And then once it reaches that level, then we will surely be happy to report it.
Sure. And on the order book side, the contribution from railway has, probably from 800 crores to now it has come down to 400 crores. So, will this remain? How the contribution of railway?
Yeah. So of course we are searching for another 100 crores per year business from railways, because this has a life only for another 4 years. Of course, we have time. We have another 4 years, but with 400 become 300, become 200, 100 and 0. So we need to find another 100 crore contract So one is to look at India, and another part is to look at outside India. We're looking at all the options, looking at different opportunities outside India also. But the pressure is on us to find an answer that we need to have to replace this 100 crore business per year with some other 100 crore business per year. We have 3 years, but time is running fast.
Sure. Thank you. Thank you so much, sir.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I would now like to hand the conference over to the management for closing comments.
Yeah, thank you everybody for joining our conference call. We are always available for any further questions, so please feel free to get in touch with us. We look forward to interacting with you once again at the end of the quarter, or I look forward to meeting many of you individually in some investor conference. Thank you very much.
Thank you. On behalf of TD Power Systems Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.